Imagine stepping into this huge, complex building, right? Loads of doors.
Mm-hmm.
And each door, it promises some kind of support, but they all look kind of similar from the outside.
Yeah, I can picture that.
That's often what it feels like trying to navigate disability benefits, especially when you hear terms like SSDI and SSI thrown around.
Absolutely. They sound alike.
It's super easy to confuse them or, even worse, think they're basically the same thing.
Which they're definitely not.
And honestly, a simple misunderstanding here. It isn't just a small mistake. It could literally cost you thousands of dollars.
Or months, even years of waiting for help.
Exactly. Delaying that financial relief you or someone you know might really desperately need. So our mission today here on The Deep Dive is to cut through all that confusion.
Okay.
We're going to use the info from our sources to really clearly unpack the critical differences between Social Security Disability Insurance, that's SSDI,
Right.
and Supplemental Security Income, or SSI. The goal is you walk away not just knowing the facts, but feeling genuinely confident.
That's right. And while, yes, both of these vital programs are handled by the Social Security Administration, they serve fundamentally different purposes. And crucially, they have totally distinct eligibility requirements.
Right.
Understanding these details, it's not just about the money itself. It's about making sure you're knocking on the right door with the right information to actually get the benefits you're entitled to.
Okay, let's kick things off then with that fundamental difference, the thing that really trips people up.
Yeah.
The core purpose of each program.
Good starting point.
Think of SSDI as, like an insurance policy you've basically paid into.
Right. Through payroll taxes.
Exactly. Throughout your working years, you've paid Social Security taxes, those payments. They earned you a right to these benefits. It's like paying premiums for, any other insurance.
Building on that, SSI is, it's a completely different animal. It's a needs-based program.
Needs-based.
Designed as a critical financial safety net. It's for people with really limited income and resources.
So it's not about how long you worked.
No, not directly. It's about immediate financial need. Your work history, or even lack of one, isn't the main factor there. It's about providing a basic standard of living when disability stops you from working.
Okay, now here's where it gets really interesting, and I think this is an aha moment for a lot of listeners. Our sources point out this common misconception that you can only apply for one program. Like, it's either SSDI or SSI.
Yeah, I hear that all the time.
But in reality, it's absolutely possible to qualify for and receive both at the same time.
That's right. They call them concurrent benefits.
Concurrent benefits. And this is so crucial because, if you just assume you won't qualify for SSI because you think you might get SSDI.
You could be leaving money on the table.
Exactly. You might screen yourself out and leave yourself really vulnerable financially, especially if your work history isn't super strong or your SSDI payment ends up being low.
So always explore both if there's a chance. SSI can really act as that safety net if the SSDI payment isn't enough on its own.
That's a huge takeaway. Okay, so if eligibility is the foundation.
It is. It's the biggest difference, really.
Let's really dig into the specifics then. What are the requirements for each? And what do people often get wrong about them?
Let's break it down.
Okay, for SSDI, the main hurdle, as you mentioned, is work credits. You need to meet specific work credit requirements.
Right. Your work history matters immensely here.
Generally, the rule of thumb is you need 40 work credits total.
Okay.
And importantly, 20 of those need to have been earned in the last 10 years before you became disabled.
That's the recent work part.
Exactly. And to put that in perspective, what's a credit? In 2024, you earn 1 credit for every $1,730 in covered earnings.
And you can earn up to 4 per year.
Right, up to 4 a year. So for most people, that translates to roughly, 10 years of pretty substantial work to qualify.
10 years is a good benchmark for many folks.
But there's a bit of flexibility for younger workers, right?
Yes, absolutely. The rules are different if you become disabled young. Someone under 24, for instance, they might only need 6 credits earned in a 3-year period before their disability began.
Okay, that makes sense. They haven't had as much time in the workforce.
Exactly. The system recognizes that. Now, contrast that completely with SSI.
Right, total shift.
For SSI, eligibility is almost entirely about your financial situation, your need.
So strict limits.
Very strict income and asset limits. Your countable income has to be below the federal benefit rate.
And assets.
Your countable resources, think cash, bank accounts, stocks, bonds, property other than your home. They need to be under $2,000 for an individual.
$2,000. That's it.
That's it for countable resources, or $3,000 for a couple.
Wow.
And here's another detail, kind of a tricky one that can catch people out. It's called in-kind support and maintenance.
Okay, what's that?
Basically, if you're getting free or significantly reduced cost food or shelter from someone like living with family who doesn't charge you fair market rent, the SSA sees that as a form of income. They assume your living expenses are lower. And that can actually reduce your SSI benefit amount potentially by quite a bit, up to 1/3 of the maximum federal payment.
Good to know. That's a potential pitfall.
Definitely. Also important for SSI, there's no minimum age. Children with severe disabilities can qualify if the household meets the income and resource limits.
Okay, so that's a huge difference too. Given these foundational differences then, purpose, basic eligibility, it's really interesting how work history plays such a drastically different role.
Oh, absolutely. It's night and day.
For SSDI, it's like your work history is everything.
Pretty much. Your benefits are directly tied to your earnings record. They actually look at your highest 35 years of earnings.
35 years. Wow.
Yeah, they use that to calculate something called your primary insurance amount, or PIA.
PIA. Okay.
Think of the PIA as the base amount. It determines your own disability benefit, and it can also affect benefits for certain family members, like a spouse or a disabled child.
Got it. And you mentioned that recent work test earlier, too.
Right. That's the part requiring work in 5 of the last 10 years before disability. It shows you were recently connected to the workforce.
And what if you've moved around?
Yeah.
Worked in different states, or maybe for the government or military?
Good question. Those work credits are generally portable. They count towards your SSDI eligibility, which is a really significant advantage for people with varied careers.
Okay. But then we switch gears to SSI.
And work history operates, well, independently.
Meaning it doesn't really matter.
For eligibility, largely no. This is what makes SSI accessible, even if you haven't worked much or maybe haven't been able to work at all. It truly functions as that safety net we talked about.
Right. And it even has ways to encourage work, doesn't it?
It does, yeah. Some interesting work incentives. For instance, the first $65 you earn each month, it's just ignored, doesn't count against your benefit.
Okay.
And then any earnings above that $65 only reduce your SSI benefit by 50 cents for every dollar earned.
So you keep half of what you earn over $65.
Yeah.
Plus your SSI.
Essentially, yes. It's a much more favorable calculation compared to how unearned income affects SSI. It's designed to encourage people to try working if they can without immediately losing all their support.
That's a really smart feature.
It helps. Okay, so let's talk about the bottom line then, the actual benefit amounts. Because what you can expect to receive obviously impacts everything.
Usually. Financial stability, planning.
Yeah.
Hey. Okay, SSDI first. How's that calculated?
It's based on your average indexed monthly earnings, or AIM.
AIME. Sounds complicated.
It's a bit complex, yeah. It's not just a simple average of what you earned. Your past wages are indexed, adjusted for wage inflation over time.
So my earnings from, say, 20 years ago are brought up to reflect today's value.
Exactly. It makes the comparison fairer across your working life. Your PIA, that base amount we mentioned, comes from this AIM calculation.
Got it. And what are the typical amounts? Is there a max?
There is. In 2024, the maximum possible SSDI benefit is $3,822 per month.
Okay, that's substantial.
It is, but very few people get the maximum. The average SSDI benefit is actually closer to $1,537 per month in 2024.
Okay, $1,537 per month in 2024.
Okay, $1,537 a reft. That's more typical.
Much more typical. And the good news here is that SSDI benefits usually get an automatic cost of living adjustment, a CLA.
Right, so they go up most years to keep pace with inflation.
Correct, which helps maintain purchasing power over time.
Okay, now SSI amounts, how does that compare?
Much more standardized. For SSI in 2024, the maximum federal benefit rate is $943 per month for an eligible couple, if both partners qualify.
And you emphasized federal rate. Does that mean states add more?
Some do, yes. Some states provide a supplemental payment on top of the federal amount. However, and this is crucial for our listeners, particularly if you're in Virginia.
Yeah.
Virginia does not currently provide a state supplement. So in Virginia, you generally only receive that federal amount.
Yeah, good to know for Virginia residents. And how does other income affect that $943? Right. If you have other unearned income, think SSDI benefits, maybe a small pension, alimony, even dividends. It usually reduces your SSI benefit dollar for dollar after the first $20 is disregarded.
Dollar for dollar, okay.
But earned income, like wages from a job, gets that better treatment we talked about. First $65 disregarded, then a 50-cent reduction for each dollar earned after that.
Makes sense. You get to keep more if you're working.
Exactly. And this ties back perfectly to those concurrent benefits we mentioned earlier.
How so?
Well, imagine your calculated SSDI payment based on your work record ends up being relatively low. Let's say it's only $600 a month.
Okay.
Since that $600 is less than the SSI federal benefit rate of $943.
SSI can make up the difference.
Precisely. SSI can often step in and provide a supplemental payment to bring your total monthly income up closer to that $943 threshold, factoring in that $20 disregard.
So you could get $600 from SSDI plus maybe around $363 from SSI, $620 disregard, $583 counted income, $943 SSI rate, $563 SSI payment.
Exactly right. It acts as that crucial top-up. It's a vital safety net within the safety net, really.
That makes concurrent benefits incredibly important for some people.
Absolutely essential. Okay, so we understand the purpose, the eligibility, the benefits. What about actually applying? The process itself.
Right. Does that differ too? Because navigating bureaucracy could be half the battle?
It can, and yes, the application process does have some key differences that can impact your success.
Okay. How do you apply for SSDI?
For SSDI, you've got options. You can apply online, which many people find convenient. You can also apply by phone or make an appointment to apply in person at a Social Security office.
And the online application, is it straightforward?
Our sources suggest it's pretty comprehensive. It guides you through, but it typically takes, maybe 30 to 60 minutes to complete properly.
Okay. What kind of info do you need ready?
You'll need detailed work history dates, job titles, duties, and really extensive medical information. Doctors' names, addresses, dates of treatment, conditions, medications.
Lots of details.
Lots of details. Now, SSIs is a bit different.
How so?
For SSI, you generally must have an interview, either in person or over the phone. You can start the process online, but you'll need that interview.
Why the interview?
Because of the financial requirements. It's a much more extensive process where they need to verify all your income, resources, and living arrangements in detail.
So they need proof of those low assets and income.
Exactly. You'll need to provide a lot more documentation, things like recent bank statements, pay stubs, if any, rent receipts, utility bills, maybe even car registration. It's quite thorough.
Okay, so more legwork potentially for the SSI application itself.
Often, yes. Which leads back to a key tip we keep mentioning.
Apply for both at the same time if you might qualify.
Yes. If there's any chance you might meet the criteria for both, apply concurrently. It can save time down the road. The initial processing time for a decision is often similar for both.
How long, usually?
Typically in the range of 3 to 6 months for an initial decision, though it can vary. SI might take a little longer sometimes just because of that intensive financial verification piece.
And common mistakes people make during the application.
Incomplete information is a huge word. Missing medical providers, forgetting jobs, not providing all the requested financial documents for SSI. Double-checking everything is critical.
Got it. Thoroughness pays off. That really highlights the administrative differences. But what about the core of it all, the medical side? Are the requirements there just as different?
This is interesting. Here, the programs actually share the same fundamental medical criteria.
Oh, okay. So the definition of disables is the same for both.
Essentially, yes.
Yeah.
For both SSDI and SSI, you need to have a medically determinable physical or mental impairment.
Medically determinable meaning diagnosed by a doctor.
Right. It can't just be symptoms, it needs a diagnosis. And that impairment must prevent you from doing what they call substantial gainful activity, or SGA.
SGA, basically. Working and earning above a certain amount.
Correct. And the condition must be expected to last for at least 12 continuous months, or be expected to result in death.
So it's not just about having a condition.
No, absolutely not. It's about consistently documenting how that condition impacts your ability to function and work. That's the key.
Okay. And how does Social Security evaluate that? I've heard about a blue book.
Yes, the Blue Book. Officially, it's the listing of impairments. Think of it as a set of conditions and criteria that are considered severe enough to automatically qualify someone for disability benefits if your medical evidence matches the specific requirements for that listing.
So it's like a shortcut. If your condition meets a blue book listing.
It can significantly streamline the process, yes. But many, probably most, disabling conditions don't perfectly meet a listing.
So what happens then?
Then they use a 5-step sequential evaluation process. It's a structured way to decide if you're disabled according to their rules.
Okay, what are the steps, briefly?
Sure. Step 1. Are you working above the SGA level? If yes, you're generally denied. If no, move to Step 2. Step 2. Is your medical condition severe? Does it significantly limit basic work activities? If no, denied. If yes, Step 3.
Makes sense.
Step 3. Does your condition meet or medically equal a Blue Book listing? If yes, you're approved. If no, Step 4.
All right.
Step 4. Can you still do any of the jobs you've done in the past 15 years? If yes, denied. If no, Step 5.
The final step.
Step 5. Can you do any other type of work that exists in significant numbers in the national economy, considering your condition, age, education, and past work experience? If yes, denied. If no, then you're approved.
Ah, okay. That's a detailed process.
It is. And this is where that medical documentation becomes absolutely paramount.
Right. What kind of documentation is most important?
Comprehensive is the word. You need all your treatment records, specialists, primary care therapists, hospital visits, diagnostic tests, MRIs, x-rays, blood work, detailed mental health evaluations, if applicable, lists of medications and their effects or side effects.
Anything else?
Functional capacity evaluations, or FCEs, can be very helpful. These are tests that specifically measure what you can physically or mentally still do: lift, carry, sit, stand, concentrate, interact with others.
Okay. And what about gaps in treatment? Does that hurt a claim?
Oh, significantly. Gaps in treatment can be interpreted by Social Security as meaning your condition isn't actually that severe or that it improved.
Even if you couldn't afford treatment or lacked insurance?
It can still be a negative factor, unfortunately. Consistent medical care is really important evidence, so keep up with your doctor's appointments, follow their advice, and crucially, make sure your doctor understands the kind of information Social Security needs.
So communicate with your doctor about the disability claim process.
Yes, absolutely. And always try to get copies of your full medical records yourself, not just summaries, so you know what's being submitted. Also keep in mind that recent medical evidence generally carries more weight because it shows your current limitations.
That's incredibly helpful advice. Okay, let's shift back to the financial side, specifically the income and asset limits after you get approved, because this seems like another major split between the two programs.
It's a huge differentiator, especially for long-term financial planning. This isn't just about getting approved. It's about what your financial life looks like while on benefits.
Right. So SSDI. Once you're approved, are there limits on savings or assets?
No. That's a critical point about SSDI. Once you're receiving SSDI benefits, there are no limits on the amount of unearned income you can receive or the assets you can hold.
So you could have significant savings, investments, property,
Yeah.
and it wouldn't affect your SSDI check.
Correct. Unlimited savings, investments are fine. However, there are still limits on earned income money you make from working.
Oh, that SGA limit again. Substantial gainful activity.
Exactly. If you start working while receiving SSDI and your earnings go above the SGA amount, your benefits could eventually stop. For 2024, that SGA limit is $1,550 per month for non-blind individuals.
$1,550 a month from working.
And it's higher for blind individuals, $2,590 per month in 2024.
But Social Security has ways to help people try working, right?
Yes, they do. There's something called a trial work period, or TWP.
Okay.
It gives you 9 months, not necessarily consecutive, where you can earn any amount from work and still receive your full SSDI benefit check. It's designed specifically to let you test your ability to return to work without immediate risk to your benefits.
9 months. That's a decent safety net to try things out.
It is. It's a valuable work incentive.
Okay, so that's SSDI, no asset limits, but limits on earnings from work via SGA, plus the trial work period. Now, flip side, SSI.
Back to those strict limits. With SSI, even after you're approved, you must continue to meet the resource limit.
That $2,000 for individuals, $3,000 for couples.
Exactly. That limit stays in place. If your countable resources go over that amount, even temporarily, your SSI benefits can be suspended or terminated.
Wow, so you really can't save much money while on SSI.
Not in terms of countable resources like cash or savings accounts, no. It requires ongoing, careful financial management. However, it's really important to remember what assets don't count towards that limit.
Right. You mentioned some exclusions earlier. Let's recap those.
Sure. The big ones are your primary residence, the home you live in.
Okay, that's huge.
One vehicle Generally, if it's used for transportation for you or a household member, the value usually doesn't matter for that one vehicle.
What else?
Household goods and personal effects up to $2,000 in equity value, though they rarely scrutinize basic furniture, clothes, etc.
Right.
Life insurance policies, if their total face value is $1,500 or less.
Okay.
And burial funds money specifically set aside for burial expenses up to $1,500 per person. There are also special accounts like ABLE accounts for certain individuals disabled before age 26. So there are some important exceptions, but the basic limit on cash and savings is very strict.
Very strict. And remember, going back to concurrent benefits, if someone receives both at SSDI and SSI.
Right. That SSDI payment they receive, it counts as unearned income when calculating their SSI payment amount.
So the SSDI reduces the SSI payment dollar for dollar after that first $20 disregard.
Precisely. It all has to fit together under the SSI income rules.
Okay, this has been incredibly clarifying. Let's try and just bring it all together then. Sum it up.
Sounds good.
At its very core, SSDI is basically an earned insurance benefit.
Right. A right you paid for through working and paying Social Security taxes.
Well, SSI, totally different. It's a needs-based safety net program.
Exactly. Funded by general tax revenues, designed for those with very limited income and resources, regardless of work history.
And understanding these fundamental distinctions, it isn't just, academic knowledge.
Not at all.
It's absolutely critical if you want to avoid really costly mistakes, delays, and just navigate this whole system effectively to get the support you need when facing a disability.
Couldn't have said it better myself. It really clarifies the whole landscape. And, while that initial application process for either program or both, it can feel daunting.
It definitely can.
Precise documentation, following all the guidelines, providing everything they ask for, it's essential. And remember, if an application is denied, and frankly many are, especially on the first try.
Yeah, I hear initial denial rates are high.
They can be, but you have the right to appeal. There's a whole structured process, reconsideration, then a hearing before an administrative law judge.
So don't just give up if you get that first no letter.
Absolutely not. Understand the appeals process, get help if you need it, and pursue your claim if you believe you qualify. Persistence often pays off.
That's a really powerful reminder. Stay persistent. So as you, our listener, reflect on everything we've unpacked in this deep dive, what stands out most to you?
Yeah, what's the one thing that clicked?
How might this clear understanding maybe change your approach or help you guide someone you know if they need to navigate these really complex waters? Because knowing the difference, it truly could make all the difference.